All right, let's get more on Walmart's earnings and its future prospects with Matt Rowe. He's the Chief Strategy Officer for Context Asset Management. Matt, good to see you again.
Good to see you.
So Walmart posting better than expected results, net income up 8.6% from $3.5 billion to $3.8 billion, and it's raised its guidance for the full year. What's your initial reaction?
And the initial reaction is that their investment in customer service is paying off and that people are coming to the store, as well as their online sales strategy seems to be working.
Well, you mentioned people coming to the stores, but we have seen a general retail slump trend.
Yeah.
Earnings from Target and Macy's very weak. So what is Walmart doing differently?
I think Walmart's ahead of the curve on investing in the customer experience. We're seeing Target chase that same strategy. I think Macy's is a little bit of a different story because they have made the decision to close down a lot of their smaller locations with an admission that maybe the real estate that the stores sit in is worth more than they're worth as a retail outlet.
So how is Walmart enhancing the customer experience?
Well, they've invested in increasing employee wages. They've cleaned up the stores. They have really focused on making them a better, more positive experience for the customer.
Well, Walmart has been making a big move into online. Has that been paying off?
It has. I mean, when you look at what overall sales look like in the retail space, it's rather anemic. Walmart's online sales, I believe, were up about 11.8% year over year. It seems to be working, and they've just made a relatively aggressive acquisition to further that effort.
That acquisition being Jet.com for $3 billion. Is Jet.com worth that much?
Well, in a world where people are putting a price and a multiple on revenue, not on profitability, I think it was quoted by one of the Value Walk analysts that there's no price that's too high to win online sales. And so when you're competing with the likes of Amazon, I think you need an aggressive strategy, and this appears to be it.
And can this help Walmart compete with Amazon? Is the technology worth it?
I think that's yet to be proven, but I think that it's an admission that they need to have an aggressive growth strategy to try to compete.
Well, Walmart, as you mentioned, also increasing entry-level wages to $10 an hour earlier this year. What impact has this increase had?
Well, presumably, if you look at their strategy, they're trying to make their employees happier, therefore making them more pleasant to engage with in the store, more likely to be proactive about helping the customer. It seems to be one of the components that's really driving foot traffic in the stores.
There was also the argument made that if you pay your employees more, that money can then go back and be spent in the store, that they'll use that increase and buy product at Walmart. Has that been happening?
You know, I've personally experienced that. I've spent a little bit of time in Walmart as a consumer myself, and one of the things I witnessed the last time I was in a store was that one of the employees was making a purchase right in front of me. So I don't know that it's necessarily a result of getting paid more, but they're certainly staying there and not running next door to buy lunch.
All right, we'll take that anecdotal evidence under consideration. Well, Walmart does seem to think so because it's investing $2.7 billion in employee compensation and training over the next 2 years. Do you think that that's a good strategy?
I think it's been working. They seem, again, to be ahead of the curve in investing in their employees' happiness. And it seems to be one of the investments that they're willing to continue to make.
Well, let's talk about the Chinese presence because it sold its Chinese online marketplace to JD.com. Part of the deal, Walmart gets a 5% stake. What do you make of that move?
I think it's a continuation of Western companies admitting that it's very hard to compete in China as an outside entity. Uber selling their operations to Didi just recently was another partnership of sorts or capitulation that shows certain companies are just saying that we'd like to have an in-country partner as opposed to try to go it alone. So whether it's making a full sale or a partnership, I think it's a smart strategy.
Kind of, if you can't beat them, join them.
Yeah.
Well, Matt, shares are up 21% year to date. Would you buy Walmart?
It's a tough question. I mean, I think if you're looking relatively speaking, both Walmart and Target are cheap relative to the S&P on a PE basis. They're both cheap historically to where they have been, relatively speaking, as well. They both have a pretty high dividend yield. I think they're probably both a pretty good purchase in the current market. I'd favor favor Walmart over Target just because of the momentum that they have in the space and the investment they're making in the future.
All right, and because they have their own employees shopping in the store as well as you. All right, thank you so much, Matt Rowe, Chief Strategy Officer for Context Asset Management.